Joining us now to discuss in an exclusive interview FuboTV CEO David Gander. David, good to see you. Thanks so much for joining us.
Wilfred, thank you for having me.
I guess the other thing we didn't mention is the very significant growth that you reported on in your most recent earnings year over year. And I wondered if you could just touch on that first of all and maybe address where you feel that's coming from. Is it people cord cutting, people adding your service to their existing cord services, or is it, as some analyst notes have referred to, cord nevers, younger people who may join your service for the first time and be with you for life rather than leaving an existing platform?
Yeah, no, we had a superb quarter. I think the first half of the year was extremely strong with all KPIs up, triple digits, subscriber numbers, streaming hours, ad revenue, et cetera. So we're feeling good about that. We're building our base of cord cutters right now. Obviously, the number of cable customers leaving that universe and moving into streaming is quite strong, very, very solid tailwind. We're also seeing cord nevers starting to look at services like ours. They're just not seeing enough content on some of the streaming platforms, the SVOD platforms in particular. So I think all around we've done a good job taking market share, and we've gone for about 2.25% to just under 6% in the virtual MVPD space. So we're feeling really good going into the NFL season.
Of all of those new opportunities we mentioned at the top, how significant is the interactive gaming and betting on your platform going to be? Have you factored that into your forecasts for the years ahead yet?
No, we have not. Actually, if you think about what we're trying to achieve, there's really three goals. The first is our goal is to reduce the cost of entry into gaming. The second is to create very attractive user economics across both gaming and video, creating a flywheel. And the third is really creating defensibility or a moat around the business. But, if you think about the market share that we have today with respect to our video business, if you think about where gaming is going, roughly around 40 billion plus of revenue, taking 3 to 5% of that could yield anywhere between $1 to $2 billion of top line growth. So it's certainly very important, and interactivity is a great way for us to identify and isolate customers that we can target later at a more efficient cost of acquisition.
What does interactivity mean, David, exactly? So you're watching TV and you're betting on your phone simultaneously, or you're doing it all on one screen? Just walk us through exactly how it's going to work, because it is kind of a different way than most people do watch TV right now.
It is. And really the importance for us was about actually getting that licensing to be regulated, because we want to embrace regulation and have discussions with regulators, because their job is to really create a safe environment for customers. We believe we are in best position to do that. So from our end, interactivity is about creating free-to-play games where you can answer questions to win prizes, and that will lead to greater engagement. We've already stated that engagement levels are up, 30 to 37% on connected devices when you factor in interactive elements into the video. So at the moment, to get licensed and to do it quickly, the goal was to actually be able to meet all of the regulatory requirements, which means that people will initially start to bet on their mobile devices. But what we've done, and we announced that during our second quarter earnings, was we're able to leverage the data from both sides. And once that's queued up, allows you to very quickly, as you change channels, your bet slip changes. So it's just fewer steps. And we think as we kind of get into the process with the regulators, we'll start to iterate very quickly to create a very interactive user experience that's simplified for people that don't really understand lines and really the betting space.